evening, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look through the crystal ball we all wish we had into equity markets for 2025, both at the local and international level, and considering what could be the direction for equities and equity markets in the year ahead, considering the multiple variable factors that do affect the direction, investor sentiment, and financial performance ultimately of the companies that make up equity markets on the Trinidad and Tobago Stock Exchange, various indices. So we'll turn firstly to the forecast for the local/regional market for 2025. And as we see, over the past 3 years, from 2022 to 2024, there would have been consecutive declines for the Trinidad and Tobago Composite Index. And on this chart, we're going to focus on the bright green line as well as the columns. 2022, there was an 11% decline in the composite index. 2023 would have been followed with an 8.9% decline, and 2024, again, a double-digit decline of 11.6%, as would have been elaborated earlier in this year's Bourse Report sessions. Now, for 2025, considering several factors, including broad repricing of the overall markets, as well as more attractive dividend yields and other factors, which we'll speak about shortly, we expect, or Bourse forecasts, a 6.9% increase in the Trinidad and Tobago Composite Index for 2025, and that would be supported primarily by most growth in the All Trinidad and Tobago Index, or All TNT Index, of about 9.2%. So we are betting, in fact, on, or we are forecasting an improved performance by our locally domiciled companies, and relatively flat performance in the cross-listed index, with some gains being offset by some declines in the price performance of several of those cross-listed companies, including names, and the cross-listed index, of course, includes names such as NCB Financial Group, GMMB Group Limited, Grace Kennedy, among others. Now, when we take a look at some of those major drivers for 2025 in terms of the local market, we are forecasting, or building into our forecast, modest economic growth of between 0 to 2%, which lines up pretty well with more expert forecasters of economic growth for the Trinidad and Tobago economy. Of course, that is going to be driven by non-energy sector growth, if reports are to be believed, which would be offset partially by energy sector or subdued energy sector production. Of course, so one of the more stark comments over the past 12 months would have been that the energy sector is expected to confront a fairly difficult 2 to 3 years in the coming, for between 2025 to 2028. So that would take off some of the shine out of the forecast for 2025. Cooling inflation should be broadly supportive of a recovery in a real economic activity. At the stock-specific level, we expect continued acquisition activity to improve fiscal performance, or at least financial results, for a couple of stocks who have made, or a couple of companies or groups who have made acquisitions a primary part of their growth strategy, as well as geographic diversification initiatives, which would help those stocks who are less exposed or less concentrated on the Trinidad and Tobago economy, and looking at potentially economies or regions which have higher growth prospects. So all of those assumptions and drivers would have been built into the forecast for the local equity market at a stock level, which would have added up to that overall index level of index level forecast of 6.9% or thereabouts. At the sector level, we take a look at the 4 largest sectors by market capitalization, which represent over 90% of the Trinidad and Tobago Composite Index in the index's value. And we can see, for example, in the banking sector, the average return for 2025 is forecast at around 7%, with the lowest forecast in terms of price performance at -4%, with the best performing stock forecast at around 21%. Conglomerates, which includes names such as Massey, Anson McCall Limited, and Grace Kennedy, is forecast to advance just about 9%, with the lowest performing forecast at +4% and the best performing forecast at about 17%. So conglomerates, from our view, looks like a reasonable place or reasonable sector to invest in the equity market. In the non-banking finance sector, which includes names such as Guardian Holdings, NEL, and Anson Merchant Bank Limited, we expect, or we forecast rather, a performance of around 5%, with the least performing or lowest performing forecast of 0%, or just trading flat, and the best performing sector forecast of price forecast of around 12%. And in the combined manufacturing 1, 2, and trading segment, which includes a lot of names, including Whitco, Angostura, Whitco, Angostura, Agostini's, Prestige Holdings, Unilever, Trinidad Cement Limited, etc. Much wider forecast in terms of performance, like the banking sector, negative 0.3% on the manufacturing sector, combined manufacturing and trading sectors, stock price performance being the lowest or most conservative forecast, and at the upper end in terms of the best performing stock, at 20% gain as well on average. These combined sectors should generate, based on our forecast, roughly a 10% gain on average. Now, turning quickly to the international forecast, well, we tend to rely a little bit more on forecasters that are much closer to these markets. And for 2025, international market drivers include economic growth, excuse me, with global growth set to be in the vicinity of 3% plus. Cooling U.S. inflation, of course, is also going to be supportive, or should also be supportive of our more confident equity markets. U.S. interest rate cuts, which would go hand in hand with that cooling U.S. interest rate inflation, should also be supportive of increasing U.S. equity markets. On the downside, policy uncertainty and geopolitical tensions could create some or lead to some volatility across international markets, particularly U.S. equity markets, given the change in administration, and of course, several variables which are yet to be digested by stock markets and investors at the global level, given this particular administration change, and certainly what could potentially be significant policy uncertainty as well as geopolitical tensions if things don't turn out the way that they intend to turn out. So ultimately, all of those factors have been driven into a consensus market forecast at the international level, and the consensus target estimate for the S&P 500, for example, is about 6,500. The current index level is hovering at around that 6,000 level, which represents a 7 to 8% increase overall for U.S. equity markets. So ultimately, for investors at the local level, you're looking at about 6 to 7%, 6.9%, in fact, at the overall aggregate market level. And for investors internationally, who have the ability to invest internationally, that is, you are looking at, in terms of just buying a passive S&P 500 index fund, as an example, a 7 to 8% forecast increase for 2025. Now, we just want to reiterate some of our investment themes at the local level. Stock selection is going to be critically important. Not all stocks will perform equally. So we are looking at, or investors should be looking at, stocks that offer a value bias, so trading at relatively attractive multiples, whether it be a attractive price to book or price earnings ratio. Dividends should also be in focus. Our forecast for 2025 was built on stocks having been broadly repriced and offering dividend yields on average of between 4.5% or 4% to 5%, in fact. Look for those groups or companies that offer built-in diversification benefits, either through business lines or by geography. And of course, as mentioned, those stocks that have acquisition activity as a major component of their growth strategy going into 2025 and beyond. At the international level, for those investors who can invest externally, look at the core satellite strategy, focusing on a larger proportion of your investment portfolio or equity investment portfolio in broad-based ETFs, or index ETFs rather, that's broad market exposure. And for that satellite strategy, if you want to pick a couple individual names, again, picking some of those blue chip companies is always a good idea. And if you want to further diversify, considering regional diversification, not just the US markets, but other regional markets such as Asia, for example, Latin America, is also a good way to spread your risk across your equity investment portfolio. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com for more info. And of course, you can check out our website, boursinvestment.com, where all of our research is absolutely free, and you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.